53.76 half from this morning was a really important level. We tagged it pre-market. It was a pre-market low. We tagged it exactly. We rallied 40 handles off of it, ultimately into the open. And to me, it was the last real defense before things could potentially get really ugly. 81 to 85 is key, and that probably had the eyes of more volume profile traders in particular. But to me, 76 half was the defense, sort of the last line just below that key 81 to 85, which was a low volume node. And so the first thing I want to point out is this is not a back adjusted chart. And that's really, really important here because if you're going to go try to match this up on your chart and you're back adjusting, you won't see this. So on a non-back adjusted chart, this took place the last time we traded this price was June 11th, and it was into the close. So let me go ahead and pull up the back adjusted chart, and you'll see what that looks like. So here's your back adjusted chart. This took place, according to the back adjusted chart, a completely different day on June 5th, and clearly the price action surrounding it looks very different. And so for my style, that's one of the reasons that I do not back adjust. Maybe I'm a bit of a boomer in this sense, but I want to know like where price traded, when it traded there, and how it traded. And that's important to my analysis. And somebody who's made up this back adjusting process, I'm sure it's great. I'm sure that person's brilliant, but price didn't trade there. It didn't trade there with that volume at that time, and in the manner in which it is being demonstrated on this chart. So for me and my style, that is incredibly, incredibly important. That's how I get a lot of my precision with some of these levels is paying very, very close attention. And so I don't get that. At least when I'm looking back over time, it's been a couple of months. I don't get that with a back adjusted chart. So I've gone back to the non-back adjusted chart, and you can see as we were trading in this range, roughly 53.80, actually up to 85. I mentioned the importance, and down into the 53.30s. We had this big seller that was selling 70s and 80s, and we had this big buyer that was defending 30s and 40s, and they were just absolutely battling it out. And this was an incredibly important battle to me. And you can see what happens, and I saw this real time and I marked it, but I can see it, if I'm not back adjusting by looking back at the chart. This to me, and again, seeing it live, but you can see it here. This is the seller's last attempt to defend. And this was when the buyer put his foot down and just completely and utterly lifted this seller. And he is stuck and he is dead. There's something else important. And so I'm going to go back to the 30 to illustrate that. So this was also an end of day spike up. If you're not familiar with what a spike is, you can see I've got a free piece on it on my website, farmdcapital.com. You can read about it. I try to put it in some pretty simplistic terms. But basically just when the last 30-minute period of the day trades outside of the range of the rest of the day, it's considered a spike. And so, not only did we have this key battle, that battle was decided at this spot, it also solidified this spike, which was never even really threatened. We back tested. This is the technical spike base. So what I'm talking about is where did that spike originate from? At what price did the buyer put his foot down and simply say, I'm going to spike this bitch into the close. You're dead, right? And the seller is on his way to the colorectal surgeon. He's done. So to me, that was the important spot. I went with the 30-minute candle open, 76 half. I could have gone with the 5-minute candle open, 76 quarter. Close enough, and was just lucky enough to guess the right level for today. So looking at today's action, again, 76 half to me was the defense of 81 to 85 effectively. And the last line of that, you can see we came down, we tagged it to the tick. We did get a nice rally off of it. It was always going to react. As of 2 weeks ago, I was going to buy this spot. I was going to buy it direct and I was going to swing it long. I changed my mind after we had week-long consolidation, 54.30 to 55.30, just above it. So to me, if you're breaking a week-long effectively balanced to the downside, it's a 100 handle range. I'm not looking to buy, 60 handles below that range. Worked for a great trade. I know a lot of members of my Discord did take that trade. But to me, it was less likely to be a durable swing low in this situation, coming in super hot, nasty, breaking that balance to the downside after a trap up at 5,600. Just a bad situation for me to try to be a hero and buy this to swing it. So again, it worked for a great trade. That's fine. And then you can see, after it was lost during RTH, sellers were quite strong today. It ended up being a key battleground for the rest of the day, and will be key, moving forward. Really, this 76-ish spot, and again, 81 to 85 being the critical area for bulls to reclaim. Otherwise, we could see some more blood, potentially another 100 handles below today's low if buyers don't step in here. And I really saw today no impressive signs of meaningful buyers. So I do expect us to resolve lower. It's possible we chop in this range and some real buyers show up early next week, and maybe we find some balance here and then break to the upside. But that's not my read as of now based on today's action. I just saw like a lot of covering, which makes sense, being down 270 handles in 2 days. But I didn't really see anything that impressed me from buyers today. So we'll see. But that's how I got this specific level. I'm just looking back, the consequences of the action taken there at 76.5. I know that's pretty nuanced, but the buyer lifting that seller, generating the spike into the end of the day that just led to a gap and go, and we never looked back. So this was the consequential level to me.